Joining us now on the phone in an exclusive interview, Michael Wirth, the CEO of Chevron. Michael, good afternoon. Thanks for joining us.
You're welcome, Wilford. Good to talk to you.
It's great to have you with us on a day like this. I wanted to start by asking, during the course of your career, gauge for us the scale and level of surprise of this attack relative to other geopolitical shocks that there have been.
Well, it's a reminder, frankly, that risks are always present in our business. And it's been some time since we've seen a major event in the Middle East like this. You have to go back to the Gulf War, the invasion of Kuwait. So it's been quite some time, but we prepare for these things. This is a feature of our business. And so while you can never predict when an event like this might occur, you always need to be prepared. So we plan for these things, and I would say when they happen, we're surprised like everybody at one level, but at another level, we've actually thought about it.
How do you think, Michael, it's going to affect U.S. oil production?
Well, I think in the short term, there's not a lot of impact that you'll see on U.S. oil production because there's a lead time, and even in shale, which has been the driving growth in the U.S. You can't just flip a switch and see more oil come into the market. So there's months of lead time in standing up new rigs and actually bringing on additional production. So in the very short term, there's not a lot that can happen. In the medium term, there can be a fair amount. In the short term, things like the Strategic Petroleum Reserve were actually built for circumstances like that and can serve as a way to buffer through uncertain market times.
I guess what I'm wondering is, would you plan to raise your capex on an event like this as prices rise? Do you think we're going to see that across U.S. oil producers and therefore get a lot more oil flowing out of this country?
Oh, I think it's way too early to draw a conclusion like that. This is an evolving event, and I will tell you, Saudi Aramco is a very capable company. I have enormous respect for Aramco, and if there's a company that can rebound quickly from something like this, it's Saudi Aramco. So I think there's still damage assessments being done. There's signs that they may bring some of their production back online fairly soon, and I think that's the real question: is for how long will this supply be off the market? And then, of course, there are other areas where supply can come in from perhaps more quickly than further ramp up in the United States.
Michael, how easy would it be to attack Chevron's assets around the world in a similar manner? And whose responsibility is it to protect those assets, yours or the states within which you operate? I get that Aramco being state-owned kind of covers both bases, but for you, whose responsibility is it?
Well, we work with local, regional, and national security agencies and forces in every country where we operate. The safety of our people and the security of operations is paramount, and so the proximity of an asset to a threat and what are the specific threats that varies all around the world, and it can vary over time. And so, frankly, that's of the highest priority for us, is to always maintain safe operations for our people and the communities around us. So it's a joint responsibility, and we have measures in place that we're constantly evaluating and upgrading.
Michael, today's move in the price did not bring it to a level that's particularly extreme, but there has been a lot of talk about it being a reminder of the vulnerability of the supply infrastructure out there. Do you think that there's any reason to alter your longer-term projections or longer-term assumptions about the commodity price, or is this just working up against a world that's still going to be well supplied for a while?
Well, 5% of global supply coming off unexpectedly certainly has an impact on the fundamentals that determine prices. And the question is, how long is the supply off? What does this event suggest about a risk premium that perhaps has not been as evident in the market? And so the backdrop, the fundamental global macroeconomic backdrop, hasn't changed. I think a lot of the supply fundamentals haven't changed in the long term. So it's early to assess, I think, the longer term ramifications of this, other than to say I do think our the sector, the energy sector, has been somewhat out of favor, and part of that, I think, is that perhaps the market had grown a little bit comfortable with risks that we never become comfortable with, and I think these events demonstrate that those risks are real.
You obviously have exposure to this part of the world. You have petrochemicals, I believe, in Saudi Arabia, a field on the border, Saudi Arabia and Kuwait. What are your sources in Saudi telling you? How do you think they're going to respond?
I think everybody in Saudi is focused, number one, thankfully, on the fact that nobody was hurt in this event. Number two, there's a lot of work underway at Abqaiq and Quraysh to assess the damage and what needs to be done to bring things back into operation safely and reliably. And then I think a third-order question is, are there other facilities that are vulnerable? People are working all those things simultaneously right now. And, we don't discuss publicly the specific measures that may be taken around specific assets, but I think, it's reasonable to assume that all of the operators, not only in the kingdom but within the region, are reassessing their current security posture.
Michael, a 5% of global supply, 12% jump in WTI today. How long do you think the market is suggesting that supply would be offline? If it came out that it was going to be offline for multiple months, do you think there would be more of a jump in the share price, in the oil price?
Well, it's a bit of a hypothetical because the circumstances around that and the market response to it is a function of many other things, not the least of which, I want to come back to the Strategic Petroleum Reserve. It's too soon to know if releases will be needed, but the president is doing exactly the right thing in making the SPR available. That's the kind of leadership that we need in a time like this. That's what the SPR was built for. And in a scenario like that, I think you would see actions from the U.S. and other countries that would mitigate some of the market reaction.
Who else can make up for the shortfall right now in the world?
Well, there's certainly other countries that have been curtailing production within OPEC. You mentioned a field that we operate in the Kingdom of Saudi Arabia. That's actually been out of production for several years due to a dispute between Saudi Arabia and Kuwait. It could be restarted relatively quickly. And so there are a number of assets around the world where you have things, whether it's strategic storage, fields that are offline, fields that have been curtailed as part of OPEC agreements that that could be activated, and it's a combination of all of the above that would fill a supply gap.
Michael, how much pressure do you think this is going to put on the Aramco IPO plans?
Yeah, I can't speculate on that. I think that's a question, obviously, for Aramco to answer.
Sounds like President Trump is agreeing now, latest headline, with his Secretary of State, Mike Pompeo, that Iran does bear responsibility for these Saudi attacks. If we did see more of a full-scale war between Saudi and Iran, Michael, what would that do to the price of oil?
Well, a full-scale war in the Middle East would very likely move prices higher. I think everybody hopes to avoid something like that, and I'm not privy to any of that thinking. I think that, at this point, as I said, making SPR barrels available and calming markets is the right thing for the president to do. And then, obviously, the assessment of responsibility in any response to this is a matter for governments to determine, not us.
Michael, how quickly in that circumstance, or if the oil price climbed significantly for other reasons, could the U.S. be fully energy independent for the short term and the long term?
Well, the U.S., in round numbers, uses around 20 million barrels of oil a day. We produce about 13. That's up from 5 a decade or so ago. And so to go from 5 to 13 has taken a lot of work, a lot of investment, and a lot of time. So to truly become energy independent is not something that's realistic in the short term. We have become much more energy secure. I think our exports are valued around the world. Were the U.S. not in a position to be exporting oil and producing at the level that it is today, the market impact would be much more severe. And so I think we should be thankful that we've got a healthy industry in this country, that we do have access to exports, and exports have been growing, and that's helping to stabilize markets. And in a prolonged higher price environment, I think you certainly would see investment decisions that would accelerate that versus the base case.
Michael Wirth, thank you so much for phoning into the show today.